Hi, Connor Woods here, market coach at Forex Signals and howtotrade.com. Welcome back to our YouTube channel, where in today's video we will aim to improve your trading performance by introducing Confluences. Now, traders take numerous decisions in just one trading day, and they all have consequences, like anything you do in life. Well, what if I told you a way you could improve those decisions in your trading journey to better your results? Have you tried Confluences? Have you ever heard of them? If not, then in this video we will explain what Confluence in trading is and how to find them to increase the chances of success. Enjoy. Now, the great thing about Confluence trading, it's not a huge change to what you have to do in your trading day, but it's essentially when you use more than one trading concept to improve your chances of succeeding on one particular trade. In other words, you validate your buy or your sell trade by applying multiple aspects of trading analysis, typically 2 or more. Let's look at an example. Let's say you're looking to buy a Euro USD, so Euro versus the US dollar, based on a price action support level, for example. It could be on anything. However, before you enter the trade, you then look at the RSI indicator to validate the trend reversal. You then find a higher possibility of a trend reversal because there's a clear bullish RSI divergence indicating that Euro USD may rise. Then you may check, the Ichimoku cloud or any other indicator, and then all 3 of them are showing the likelihood of the trade going in the direction that you initially thought. So what you've done there is you've added confluence to your initial trade based on price action into something you can be more confident about. If the RSI was telling you something different, let's say for example you was looking to buy Euro USD from price action, but then you look at the RSI and it might be telling you bearish divergence, for example, and that could have saved you from entering a losing trade. So it does work both ways as well. And that's what confluence in trading is all about. It's all about giving you that extra confidence in a particular trade. Now, I've put together 5 tips and tricks when it comes to how you can adopt, confluence trading into your strategy, or how you can, keep your emotions in control, for example. Now, the first thing I want to talk about is a trading checklist. Now, I love doing this. And this essentially is, picking your favorite aspect from each method of trading. It might be fundamental analysis, chart patterns, indicators, price action, harmonics. Pick your favorite one out of each of those sort of categories. And once you've picked at least, one thing out of 2 of the concepts, write down a checklist that you can tick off before each trade you take. And you almost have that robotic approach as you go onto it, because you have a list there, and then you know that, okay, so if I know this part's right, then I can tick that off and I can tick that off. And the more you have to check off, the better the confluence, and the more confluences you can tick off, the better the trade. Give it a star system. That's what I do. So I normally have about 5 confluences on my trades, and then if 3 of them are ticked off, that's a 3-star trade, so it's okay. But if I can get a 5-star trade, they're the ones which can give the yield the better returns, or have the best chance of success. Practice as well, of course. Demo accounts are available from many brokers and trading platforms. You may use these accounts to practice your trading confluences. Try a different combination, for example, before putting real money at risk in the market. Backtesting as well. The backtesting tools will show how your confluences have fared in different market situations, in different market conditions. You enter strategy specifics like stop loss, take profit, position size, and that backtesting really evaluates the checklist that we just mentioned in the first point, using past market data to see how your confluences may have worked out. We have just released a video on backtesting on the channel, so feel free to check that one out. Also, controlling emotions, very important as well. If you start to feel emotional, then you will ignore confluences. You'll forget about your plan. And as soon as you feel that way, it's just so simple. As soon as you feel emotional in any way, step away from the charts, come back the next day, and then to really check your checklist again. And time frames as well. The time frame you choose and the one that your preferred time frame is may affect your outcome, and you analyze your sort of checklist on different time frames. Adjust your time frame and check whether your confluences are meeting better on a particular time frame over another one. Let's look at an example on how, a trade idea that I've recently been involved in, and how I could have initially looked at it from just a price action perspective, but then started to use other concepts to really get myself a better trade. Okay then, so here I am on the crude oil market. I like to trade crude oil, and this is the situation that I was faced with when I was looking for a particular trade. So the first thing I always go to, I'm a price action trader. I like to use price action concepts. So I'm looking for sort of liquidity levels, highs to be flushed out, etc. And so when I look at the market as right now, I use in the daily time frame because it's just the time frame that I prefer to trade on, and it's the one that I found my Confluences work best on. And let's just have a look at some of the first thing I wanted to do was I always marked sort of this consolidation period that we was in, 1, 2, 3, 4, 5, 6 days of consolidation here after Saudi Arabia decided to cut oil production, and that caused a gap higher in the prices. So from a price action perspective, first thing I looked at was, liquidity levels. I looked at this gap that was formed in the market, which we can see quite clearly here. So I marked that down. So I've got my, price action concepts in play. Got some buy side liquidity here to be taken out. So I marked that as well. And I've also got some liquidity up here to be taken out as well. And you can see that move higher took out both of these highs. It really flushed out these highs. And so I was looking for a selling opportunity here. And I could have just sold, off the back of that, and I could have just potentially sold target, right? Maybe the filling of that fair value gap, for example, could have been a decent way to approach it. Now, when I actually start to think about adding some different concepts, so I'm combining now price action, I've got fundamental analysis in there as well, because I'm thinking, okay, so the reason that Saudi Arabia increased their oil production decreased their oil production was because of the threat of a recession hurting oil demand. And I think a recession is quite likely, and that's going to challenge oil prices because of that impact on oil demand itself. So already I've got price action and fundamental in play right now. Can I get some indicators in play? Well, actually, when I add the indicators on the screen now, I've got the 50, I've got the 100-day moving average in purple, and I've got the 200-day moving average in this yellow line. If you look actually where the reaction come from after we flushed out these highs, it was right from that 200-day moving average. And that's given me extra confidence that this is enough, 1, 2, 3 retest to push this market down. And then when I add the RSI indicator on as well, you can see that we've just started to get, that RSI crossover below that moving average here. And that's another indication to me of a bearish reversal. So what I've done there is I've sort of got a 3-star trade here because I've got the price action concepts working. I've got the fake out to the top side. I've got the fair value gap to target. That's price action. I've then got my indicators on there as well. I've got my 50, my 100, and my 200-day. There's the reaction from the 200-day. I could target now the 100-day moving average as a potential area of support, and I've got that moving average. I've got that RSI crossover as well. So when this daily candle closes, that was a good sign for me. This market now wants to at least come and flush out the bottom side and start to fill some of this fair value gap. So I could place a nice trade here, looking at a short position, because I've got my fundamental analysis booked in as well. It's helping with my stop loss level because I know I can just put this stop loss maybe just above, that 200-day moving average, thinking that this is the, that candle is the confirmation candle that we're going to go lower. And I can target, this 100-day moving average to start off with for a nice 1.84 risk reward trade, nearly a 2-to-1 trade, which is sort of the ballpark that I like to go for as well. And then I can let this play through now. And you can see that my target was hit here within, 3 days of trading. Nice consecutive candles to the downside. And then look exactly what happened. If I ignored the moving averages here, not only would it have been difficult in terms of risk management, but also I would have probably looked to target a full filling of this candle imbalance here that we've got, of this fair value gap, that we've got here. When actually, when we look at the moving averages, when we come in, now I know that potentially we're looking at areas of support around this 100-day moving average, which, as you can see, wicked and then traded higher, and this is the third retest we've got. So I'm happy to be out of that trade, at 1.84 risk reward, because potentially this could cause a rally up towards where my entry level is, and then you start to sort of get emotions involved because you was in profit, and then you get stopped out entry, etc. So that's just allowed me and given me extra confluence and extra confidence in this trade idea by combining some different concepts. So there we have it. Hopefully now you know what Confluence in trading is all about and the key tips and tricks to trading price action Confluence. Remember, Confluence in trading is essentially any situation where multiple trade concepts line up on your charts, indicating that you should enter or exit a trade. You're not limited in the ways you can do this as well. Go away and try different methods that suit you. For example, you could use chart patterns and indicators, or indicators and order flow, or harmonic patterns and fundamental analysis. The point is, it does not really matter what combination you use, as long as it is something that first of all interests you, and second of all, is something you have knowledge of. Write down a list and give your trade a scoring system. Remember, the more confluences, the better. Finding them to evaluate your trades can ultimately help you become a better trader. Thank you for watching, and we'll see you all in the trading room.